What's going on, traders? Welcome to Investing Trends, where we talk about the latest news and trades on trending stocks. So in this video, we're going to talk about one of my all-time favorite long-term ETF called VOO. VOO tracks the S&P 500 index, representing 500 of the largest US companies offered by Vanguard. So do you already own VOO? Do you think VOO is slow and boring? Well, it may be slow and boring, but if you want to make money and invest smart, the simple VOO is the right choice. So what is VOO and what is the S&P 500? If you guys don't know what it is, it's pretty much a portfolio that Vanguard makes up of the S&P 500. So it has holdings for stocks such as Microsoft, Apple, Amazon, etc., the big companies that you may have heard of. It has all these types of companies that you can buy into so that you don't have to buy one individual stock on each different company and putting risk on each individual company. It makes it easy for you to buy into all of these companies all at once and spreads out your risk of the portfolio. And if a company is really not doing well, Vanguard, along with the S&P 500, will remove this company and replace it with another one that is performing better. For example, recently on September 21st, 2020, the S&P made some changes of adding Etsy and the semiconductor equipment maker Teradyne and pharmaceutical company called Catalent to the S&P 500. Plus, they removed the underperforming stocks such as the H&R Block, Coty, and Kohl's. So why is VOO so great and so amazing? And it is because it outperformed major ETF and goes to show how the S&P 500 continues to be held up as the standard by which all investment performances are measured. Hedge funds are essentially paid a lot of money to generate returns that beat the S&P 500, yet on average, less than half do so, and this is primarily due to the outrageous fees. This is one of the reasons why an increasing number of investors are turning into VOO. Now let's look at the expense ratio for VOO. It is at 0.03%. That is extremely low, and it is challenging to see anything lower than that. But what about the good old SPY? No, stick with VOO. Why pay more for something that results in the same performance as VOO? The expense ratio for SPY is 0.09% versus the VOO, which is 0.03%, and the performance is the same. But what about VTI? It's essentially the same thing. Just go ahead and pick one and stop stressing between the two. So what's so good about VOO compared to the other index funds? 1. S&P 500 is a simple yet powerful way to invest into various companies at once. 2. It has outperformed major indices and active hedge funds. 3. It provides dividends of 1.7%, which is pretty sweet passive income every year. 4. The expense ratio is super low at 0.03%, and you won't be able to find fees this low. But what about the market crash? Isn't there supposed to be a market crash coming soon? I don't want to buy it at the highs and lose it all. Look, it is true that there is high volatility in the market at the moment, and buying high and selling low is not ideal. So here's the strategy. Today, the Vanguard S&P 500 ETF VOO closed at $311.80. If we go back 5 years, we can see that VOO peaked at $322 and is currently trading lower than the market highs right now. So if you were to buy today, you're not buying it at the market highs. Plus, you're not going to sell this. Let's say you see VOO up with gains a month from now. Great, good for you. Buy some more. Let's say you see a loss in VOO a month from now. Do you sell now? No, you buy some more. How about if there's a loss 2 months from now? Do I sell then? No, you buy some more. How about 1 year from now? I hope you get my message. Dollar cost averaging has been super effective on index funds such as VOO, and it will do you wonders if you apply this strategy over the long term. It is stress-free, passive, yet rewarding with the goal of 10 plus years of investment horizon. So the strategy is to systematically buy VOO at the same dollar amount every month. Evaluate how much you can afford to invest every month. Let's say $100, $200. And don't try to time it and just buy VOO at the beginning of the month. Try to keep it consistent at $100 or $200, whatever the amount that you set, and hope to steadily increase the amount as you grow older and have more income. And make sure you turn on dividend reinvesting. Now, just for fun, let's run some return analysis. So the market was super hot before COVID. It was going up higher and endured a huge decline in March when COVID hit. So entering the information, you will see that the annual return is above 10% if you invested in February before the COVID. Now the market has reached all-time high in August 2020. Just to be a little bit more precise, it looks like it was August 23rd, 2020 when it reached all-time high. And let's say we started investing then, you will still be up today. Does age matter for investing into VOO? No. Although this is a simple and entry-level strategy into investing, it is super powerful strategy that everybody should do, no matter the age. I still do it and buy into VOO every month. It is never late, so you should start today. That's it for this video. I hope this was helpful for your long-term investing and hopes to reach financial freedom. Please invest safely, subscribe to the channel, and hit that like button. I thank you, appreciate you, and see you next time.